Good day, everyone. Thank you for joining us once again here at Sea Freedom Brew for our weekly briefing. I am Jamie Sumner, Chief Analyst, and for this week's briefing, just want to review over some of the many releases that came out last week, particularly pertaining to inflation. We had the Fed meeting this week, tomorrow anticipated to come out with their new statement and their new projections, so it will be interesting to see where they see the economy today, if they're continuing to project a slowdown out in 2019 and 20 for GDP, as well as what they're showing for the overall dot plot, if they continue to see those 3 rate hikes in 2018, or if they feel that they can push in another one in 2018 and make that a total of 4. Don't think that's going to happen. However, we do see some economists out there and some of the statements by some of the Fed members that potentially could be something that might be on the table. But we're going to be interesting to see how that comes out tomorrow on Wednesday. So for this week, though, let's go ahead and look at some of these inflation numbers that came out last week. First, look at the producer price index. Overall, saw a little slowdown month over month in the growth rate, but we're still showing a positive number for the overall growth in prices. For that final demand, we saw final goods prices, as you can see here in this chart, coming down actually negative, but overall, we have that final demand up 0.2%, just as the consensus came in at 0.2, and below, though, where we were last month at that 0.4. When we look at the less food and energy, that core number for inflation in terms of producer price index, that came in at 0.4, a little higher than the consensus at 0.2%, but similar to the prior month in January. So overall, when we're looking at the total, the month-over-month changes, we saw just slight bit of a pricing pressure in terms of where it came out compared to consensus. When we look year over year, we do see a slight increases on the overall final demand, 2.8% increase over February of 2017, and that's up from where we were last month, where the year-over-year change was 2.7, so from 2.8 for February. Less food and energy, you can see that came in at 2.7, 0.2% higher than where we were in January for the year-over-year change at 2.5. So overall, when we're looking year-over-year, slight increases. Not runaway inflation, not enough in my mind to really push the Fed to need to increase rates this go around. However, the probability is this week we should see another 25 basis point increase in the Fed funds rate. Looking at the consumer price index, overall we met expectations. 0.2% growth in all items in February, month over month, year over year 2.2. When we look at the core number, less food and energy, again 0.2% month over month change in that core. Year over year, we're at 1.8. That year over year number came in just slightly under the consensus at 1.9. So we came off just a little bit, but still continue to see in both the PPI and the CPI continue subdued inflation numbers so far this year. Looking at the prices in terms of imports and exports, imports up 0.4, exports up 0.2. No real big pushes. In fact, when we look, it came down from where we were in January, where the changes was 0.8% for both imports and exports. Now, flipping from the inflation numbers, continue to show subdued inflation this year. We look at the retail sales. Retail sales, kind of a disappointing release this go around. We saw overall month-over-month changes actually down 0.1%. That, for the most part, was due to the pull-off in the motor vehicles and parts. We saw that come down almost 1% at 0.9. Some positive items we can look at would be the building materials, garden equipment and supplies. That's up 1.9%. And then the sporting goods up 2.2% month over month. So those are fairly positive for this month in January, or the February release. Now, we roll up all the releases that were put out last night, and we look, or excuse me, last week, and we look at the GDPNow put out by the Atlanta Fed. We can see the impact here. We're down to 1.8% on their projection for first quarter 2018 GDP. So that's down to 1.8. This number tends to be pretty volatile the further away it is from the actual release date of the GDP. And as we get closer and closer to the date, it becomes more reasonable, and that's what we're seeing. Hopefully, numbers will start coming out a little better, and we should start to see this pick back up. But as of now, we're down to that 1.8% for the first quarter GDP as an expectation. Well, that's what we have for you this week. We look forward to seeing you next week back here. And everyone, have a great week.